Hello traders, the title of the video is how to combine stochastic divergence trading and triangle patterns. Do you trade stochastic divergences? Do you trade triangle pattern? We want to combine stochastic divergence trading and triangle pattern trading. Alright. As always, I'm on the monthly charts. And this time, the financial instrument that we are analyzing today is the Kraft Heinz company. It belongs to the consumer defensive sector, packaged foods. The EPIC for that stock is KHC, Kilo Hotel Charlie. It's an American stock, all right? So when we see a triangle pattern, as you can see on this chart here, all right, it's indicating to us that anything is possible. The price can break above or break below that triangle. Though most traders will be expecting a continuation, which is normal because the price going up first, and the triangle is a consolidation. Very often, it's normal to think that a continuation will take place. But practically speaking, one should expect that anything is possible, a breakout above or breakout below, alright? So as you can see here, it's a breakout below. You can see this candlestick bar here. I talked about it in one of the videos that I posted at the 24 Stock Trader YouTube channel. Though it's not a perfect candlestick pattern that we were talking about. The one we were talking about before was the candlestick bar with a long tail. That is bearish. It closed below the opening price. Though this one is not bearish, it still got some element of bearishness, because you can see that if we highlight the high, the low and the median line, the closing price is near the low of now it's below the median line of the range of that candlestick bar. Though it's bullish, it's a little bit bearish. Okay, so the shadow also of this candlestick bar is also indicating to us there were sellers there above that triangle, because if the price in the triangle is consolidating, people will place orders to sell at the top of the triangle. So as the price try to escape the bearish pressure in the vicinity of the top of the triangle, they push it back inside and they finally push it to the other side. So now it's clear to us that the bearish traders in this zone are not kidding. All right, they are not kidding. They are not kidding. All right, but we will see how far they will go. All right. So not only that, there was this triangle with that candlestick bar alerting us that probably there are sellers there. The stochastic 833, my favorite setting for the stochastic 833, all right, is also exhibiting a bearish divergence. You can see that the price is forming, going up like here. Stochastic, no. Denying that move, exhibiting a bearish divergence. The best technical indicator for trading divergences is the stochastic. If you want to learn and master divergence trading or the stochastic indicator, go to www.stochastic-macd.com and sit down, have your favorite drink, and watch some of the video and read what we are talking about. Okay, so a bearish divergence, stochastic exhibit bearish divergence. The price is confined in a triangle. So you remember we said that if the price is in a triangle, we say anything is possible. Now the stochastic is helping us here say that, well, though anything is possible, George, I agree with you, there is a high chance that is more likely to go down. That's what is happening here. Stochastic did a very good job, divergence here. But the mistake that we do not want to repeat is that on the lower part of the triangle, there are buyers here, like where we have a normal consolidation in a horizontal channel. You see, so there are buyers here. People bought it here. You see the tail of this candlestick bar. As it came near the low, people are buying. Okay, and as it came from the top, the bearish traders that are not kidding push it below that low because they don't want anybody to try to buy it anymore. You get a message? They don't want anybody to try to buy it anymore. They get fed up with them and they say boom, down, because the stochastic is giving them a warning that it's more likely to go down, and those who are selling don't want anybody to buy and they push it out. Now after this candlestick bar is out of the triangle, we have a bearish trading setup. But if you look carefully, I draw another common set trend line along the price. It closed also below it. So those bearish traders are very careful, right? So all right, so they push it out. So after this, this about the monthly chart, so this month of June 2017 is closed. We have a bearish trading setup. Okay, and we go to the daily chart looking for trading signal in normal condition. I'm choosing my word carefully. In normal condition, sometimes the price will rally up again to retest the lower part of the triangle before coming down. But us looking at the attitude, bad attitude of those bearish traders, they are not kidding. I doubt it that we may have a rally about in normal condition after it came out of the triangle. In an orderly market, the professional would like to bring it to retest the edge of the triangle before they will sell it down. But it's not looking that it's not. I don't think it's going to happen, that rally. All right, I don't think so. But so let's go. So we have a bearish trading setup here. This candle is a bit long for me. I would prefer it to be a little bit shorter. This one here, it's a bit long for me. Personally, I would prefer to close somewhere. Near here, but those bearish traders are not kidding at all. All right, let's go now to investigate on a daily chart what is happening there on the signal doctrine. Wow, you see on the daily chart. So you see, it came out of that triangle. As I was telling you, in a normal market, we would prefer it. Okay, that they bring it up either to retest that blue trend line, which is the common trend line that I draw. That will be reasonable, all right? Before one can use a top-down trade, one can sell it here, okay, using a top-down trading method, or to bring it all the way to the green line before one will attempt to sell it. But it looks to me that the bearish traders here are pushing it very, very fast. In that case, what we need to do on the daily chart, you can see here, we connect this point here and this one here, and we draw a bearish trend line. Okay, we leave that one there on our daily chart. If you are not here, you see here there was a kind of a rally trying to go up, but they push it down very fast. They are not kidding at all. Okay, price did find a support near the blue trend line, the common trend line, try to go up a bit, but they push it back down very fast. So you want to check the economy news relating to the Kraft Heinz company, why some traders are so bent to sell it like this, all right? And they are not allowing the rally to happen. So watch that bearish trend line on a daily chart. Hopefully, they will allow it to come back and retest it or retest the blue trend line. We will see what will happen. But as the price going down, again, we on the signal time frame. You see there was a double bottom here with a higher low. It looks to me that they're going to push it all the way here to that support level at $81.15. All right. Before we will see the first bounce up, as those who are selling are taking their first profits. All right, so watch the level of $81.15. It's rolling it down to that level. All right, the bearish traders that are selling will be compelled to take some profit at that support level. All right, they can push it down a little bit more to this one here at $79.98. The first one to watch is $81.15. It looks to me they want to bring it down here. All right. Also, one more line that I want to draw is a media line between the blue line. You understand what I'm trying to do here? All right. The media line between this horizontal line and this one here. Watch out for that trend line also there. All right. So the triangle is in place, telling that anything is possible. Now we have a stochastic bearish divergence, telling that there is a high probability that it will go down. Now we will not ignore it. We will pay attention to it. So in that case, well, the best thing that we should do, instead of trying to buy at a lower part once the stochastic exhibit that buried divergence, is to try to give priority to sell signal below the top of the consolidation. So when you come here, you try to sell it, come here, you try to sell it, and you ignore the buying here because you know that it's tricky because those bearish divergence stochastic traders may try to push it down. This was going on now. All right, so you don't want to be here try to buy as some traders were doing on the daily chart here and they push them down. You don't want that. Because we see the bearish divergence, we know that, okay, high probability stochastic is the best indicator for the bearish divergence. It's likely to go down. But we will not sell until we see a clear-cut sell signal. All right? All right? So we see that the price finding a bit of weakness here. So here, some trader may say, George, are you blind or what? There was a double top here. Yes, there was a double top with a higher low. This high is higher than this one. As the price closed below the prior low, which is psychological price level, game on right here. And but as you are selling there, you know that your first target is the low of the triangle. And if you break below it and find a resistance, all right, a bit messy here. All right, break below retest did not happen. They push it down to this level before it crashed down. All in all, price is confined in a triangle. We see a stochastic bearish divergence. Don't assume that definitely is going to go down. All it's saying is that there is a high chance that it will go down. And then we'll look for the trading signal. If the signal is fired, we'll use another time frame to enter the trade, which means we are using a top-down trading method to control the risk. The reason why we need to do that, if you look carefully in this session here, there was a kind of it's not proper triangle, if you accept that. If you call this one a triangle here, it's a bit messy triangle here. That was telling that anything is possible. Look at the blue section here. At that point in time, you can see that the stochastic here was going down a bit. So it looks like a divergence also here. But you can see that though the stochastic is declining, the price at that point in time did not display a new higher high in comparison to this one. It did not. While the stochastic was going down. But in this case, as you can see, the stochastic was going down and the price tried to form a new higher high. Now we have a valid bearish divergence. This one was not a very good one. But suppose you were here and you thought that this was a good bearish divergence. So you say, all right, George, that's it. We have a bearish divergence. You say that the stochastic is the best technical indicator for divergence, and the price is confined in a triangle is more likely to go down. Your strategy will be to look for opportunity to sell at the top here. But if you are not applying a top-down trading method, you may not profit from that trade because the price went up instead. So it's very important when we are combining the stochastic divergence and the triangle pattern that we apply a different time frame trading method, a multiple time frame trading method, or a top-down trading method. All right. Though I'm on a monthly chart, we can apply this strategy on the hourly time frame, on the 2-hour time frame, 4-hour time frame, daily time frame. All right. In all cases, we want to use a top-down trading method to control the risk. If the signal fell, we are out. All right. Very simple and very powerful. All right. Price going down, look for the support level. Now things down, you see there's a support at $81.15. If that level fell, the next support level is in a zone of $68.07. All right, one step at a time. If you have a two key level, like I'm showing you now, all right, always remember the median line between the two key levels. All right, one step at a time. If you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to combine stochastic divergence trading and triangle pattern. The financial instrument that we were analyzing today is the Kraft Heinz company belonging to the consumer defensive sector, packages food. If you find this video truly useful, all right, let us know by giving us the thumbs up. If you think that it's another blah blah blah, let us know by giving us the thumbs down. This will put us under pressure to improve our next recording. However, if you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to combine stochastic divergence trading and triangle a pattern. Happy trading to you all and speak to you soon.